Right, now we are gonna look at the chart. We're going to look at how to go around the platform. I'm sure right now you've downloaded your platform. Maybe you're opening your demo account to learn. The practical side, it makes everything. You know anything, what you're looking at, you are clueless. So I'm going to start you from scratch. Then I'm going to show you after this how to analyze the market. After that, I'm going to show you our strategies. You will be a good trader, I can assure you of that, and you will make money. You'll make a lot of money for the kingdom of God, for yourself, for other people. You will be a profitable trader. So take courage, right? You must take time to learn this thing, because it's once you master it, you're going to be very, very profitable. Just have to practice, watch this DVD over and over again. So right now we have a platform. Okay, so I'm going to start from scratch. What do we see here? Okay, when you first open your platform, it will be something like this. I want to show how normally it starts, like, right after you open, it will be something like this, right? It will be something like this. This is how your platform normally starts before anything else. So what do? You just see something like this, you don't know what this is. First of all, you press here, you can see these are the currencies, right? Actually, it will be something like this, right? So it will be something like this when we start. So you don't know what exactly is happening here. So these are the currency pairs: the USD against the CHF, the GBP against the USD, that is the Great Britain pound against the US dollar, the euro against the US dollar, the USD against the Japanese yen, USD against the Canadian dollar, Australian dollar against the US dollar, euro against the GBP. These are currency pairs. I'm going to explain how they work. So what do? You right click here, and then you go to show all, right? Then it will show you everything. And then you press again, the right click, you go to time. Then it will show the time. Here's the time. Sometimes if the time is covered a bit, you just drag this and open it like that until it shows you the hours, the minutes, and the seconds. So you should have bid, ask, and time. And then how do you open a currency pair? They want to trade. Let me say, for example, I take Euro USD, right? I press on the currency pair, then I press my right button. There will be new order, chart window, tick chart. I go to chart window and I press it. There we have Euro USD, right? So how do I fix my chart? You see, it's not very nice like this. It's not tradable easily. You press the candle. Right now we are here, bar charts. You go to candlesticks. So I press it here, which shows candlesticks, and then I zoom in. So I zoom in twice, it will be nice like this, and then I press this one, it gives me space. It says shift end of the chart from right border. It gives me space so that I can trade well. So right now we've opened our chart. Now I press this button here, which is my sell and my buy. So that gives me the access to sell and buy. I just press here, so you can see sell, you can see buy there. Right. And now we see M1 here, M5, M15, M30, H1, H4, D1, week 1, and month. What does that mean? It means that right now we are in H1. That means every candle here represents an hour. So this is an hour, this is an hour ago, this is an hour ago, this is an hour ago, this is an hour ago. Make sure that you watch my mouse pointer. When I press M1, it means that every candle represents a minute. This is 1 minute ago. This is the current minute. This is 1 minute ago. This is 1 minute ago. This is 1 minute ago. This is a minute ago. This is another minute ago. Can you see that? So this is basically 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes ago. From here to here, 10 minutes. When I press D1, one candle represents a day, right? Daily chart. So weekly, one candle represents a week. M30, one candle represents 30 minutes. M15, a candle represents 15 minutes. M5, a candle represents 5 minutes, right? So this is how it is. So right now you can open a currency pair, right? And you can put in your sell and buy, and you know how to do candles, right? So we are getting there. We are getting there. It's very easy. It's very easy. So now I'm going to show you something. I'm going to show you on the minute chart. I'm going to show you how to place a buy and how to place a sell. right? So make sure that you watch this DVD over and over again. So now, what exactly is this graph that you see here, right? This graph that you see here talks of the price level, the price of the euro against the dollar. But I'm in South Africa now. $1 equals to 14 rand 50 today. That means $1 is equal to 14 rand 50 when you convert it. So let me use the dollar against the ZAR to explain to you the graph, even though we don't trade the ZAR here, but I will just show you so that at least you can understand what is happening with the graph. What does it mean when the graph is going up and down like this, right? So I'm going to show you USD against the ZAR. I just want to show you I want to show you what's happening here. I'm looking for the USD against the ZAR. Let's see. I'm sure we are close. Here, USD ZAR. Can you see that? So what am I going to do? I'm going to press it, and then I'm going to go to chart window, and then it opens, right? How do I fix it? I press the candlesticks, I zoom in, right? Then I press this one, it takes my chart forward. Then let's say I go to 1 minute chart. I want to demonstrate something. Right, here's the USD against the ZAR. Then I press here. Can you see that? Now, we can see right now where the price is. It's on 14.16. Right now, $1 is equal to 14.1645. You know, it's always changing. And when I look after maybe say 10 minutes, it might be here on 14.2, right? In the morning it was 14.5, so that means it was up there. So this is what exactly is happening. What you see right now, I'm going to make this disappear, is the rand against the dollar against the rand. Right now here $1 was equal to 14 rand. I have to just check. $1 was equal to here where it was 14. Can you see 14.23? So that means here earlier it was 14.23, but right now it's on 14.16. And if it goes down, it will be 14.12. That's what you get exactly. Even when you check on your phone, you check how much is $1. They'll tell you it's 14.5. It might go to 13.4, 13.5, 14.7. This is exactly what you see. This graph, this is the price forever changing, always changing, always changing. So I explain with the USD ZAR because we are in South Africa. This is where I'm shooting this from, so you will relate easily. But we don't trade the USD ZAR. So right now I go to the USD, Euro USD, the currency pair that we trade a lot. I open it. The way to open it is that you can press chart window, or you can just drag it in. You just press the left button and drag it here, and it opens. But when you do that, the one that was showing at that time will disappear. But if you open it through chart window, the one that was opening will just come down here. So right now the USD ZAR has disappeared because I dragged the Euro USD. So right now, this is the price of the euro against the dollar. It has been like this today. So right now we can see 1 euro is equal to 1.104 USD, for example, but it's always changing. Price is always changing. So now, how do you make money from trading? This is how you make money. Let's say the graph was down here. Then I buy when it's here, right? And then the graph goes up and up and up and up. That means I make profit because I bought what is here, right? So I bought it when it was here, and then I close my profit when it's here. I've made profit. Why? Because I bought when it was low, and then I sold it when it was high. That's how it happens. Or let's say I sell when it's here, right? I sell when it's high here, and then it goes down. That means I make profit. I make profit. So let's say I bought when it was let's say $1 was 14 rand 20. That's when I bought. And then it went up to 14 rand 60. Guess what? I've made profit from 14 rand 20 to 14 rand 60. I've made profit of how much? Of 40 cents or $40 from that. It's not actually $40, eh? It's actually 40 cents. I've made profit from that difference from 14 rand 20 to 14 rand 60. That's how you make profit. So as the graph, if the price goes down, that means I should sell when it's here and take out my profit maybe when it's here. So now that's how it happens. That's how you make money. So for people who are wondering what's my money, where do I get my money from the difference as the price moves. You enter the wave as the price moves. So here's the balance. This is the demo account, $5,000. Here's the equity, $5,000, and free margin. I'll explain everything. This is your balance. Sorry for that. This is your balance, 5,000 US dollars, and this shows how much your account can be. For example, if I enter a trade, you will see how the equity moves. So right now, I'm going to show you how we do it right now. If I press sell, when I press sell and the graph goes down, I make money, I make profit. If I press buy and the graph goes up, I make profit, right? The trading has a language. When you press sell and the graph goes down, it's called the bears. Actually, the price is called the bulls against the bears. The bears go down. This white line are the bears. So when they say a bearish candle, they mean a downward candle. Bears, bearish. You understand? Bearish comes from bears. It means a down candle. When I say a bullish candle, it talks about the upward movement. The bulls are going up. So a bullish candle is a candle that is going up. A bearish candle is a candle that is going down. So it's a battle between the bears and the bulls. That's how trading operates. So now, if I press sell and the graph goes down, I make profit. But if I press sell and the graph goes up, I make a loss. If I press buy and the graph goes up, I make profit. If I press buy and the graph goes down, I make a loss, right? So right now I'm just gonna show you without any analysis. I'm just going to sell without any analysis. I'm just gonna put a higher lot here so that you can see well what's happening. So here is my profit margin. Is on 0 right now because I've not entered a trade. Can you see that? It's on 0. You must just watch the mouse pointer. It's on 0. So I go there and I press sell, right? Oh, I have to accept here. I press sell. Can you see that? I've pressed sell. Here's my sell line. This is where I sold. So it shows that I sold with one lot. I'm going to explain the lots later. So now, if this graph passes by and goes down, I'll be in profit. Right now, I'm in negative $8. Why? Because immediately I press sell, the broker takes their commission. They just took commission of negative $4.42. The commission is dependent on the lot size you trade with. But right now you can see I'm in profit of $1.58. I'm actually, this is your profit here, but because of the commission, your total profit is here. That means that's your, right now I'm in profit of how much? $5.58, $7, $10. Why? Because the graph is going down and I just close my trade. So how much did I just make? Right now my account is on $5,012.58. That means I've just made $12.58. How much is that? $12.58. Let me see how much it is when I calculate with my phone. Let's say its time is 14.5. Right, $12.58 times 14.5. It's equal to 182 rand. I just made 182 rand now as I explained to you. As I'm explaining to you. So what here, this is my money now. I can actually withdraw that money. I can go to my client area. You remember the client area where you put in your password and your email address. Then you can go to withdraw and choose how much you want to withdraw. Right? I'm just making an example. That's how easy you make money from trading. And now the graph is still going down. Maybe I would have made more money, but I just took out my trade manually. But I was just demonstrating to you. So when you sell and the graph goes down, it passes your sell margin. The broker, remember, he takes his commission. So your graph has to go down so that it covers the commission and then gets you in profit. That's why sometimes when you sell, you'll see that here it shows profit, but you're still in negative. Why? Because the broker is still taking his commission. Yes. So they take their commission. Whether you make a loss or profit, once you enter a trade, they take commission. Now, when I press buy, let me press buy. See, I just press buy. Here's my buy line right here. This is my buy line. Bought one lot. If the graph passes this line and goes up, I will be in profit. But now you can see it's below the line. I'm in a loss, and and as it goes lower and lower, my loss increases. You can see right now I'm in a loss of $13, negative $13. But remember, from the psychological part I taught you, do not be afraid of running in a loss. All trades start in a loss. Why? Because once you enter a trade, the broker has to take his commission. So you wait. That's why there's analysis. It's not gambling, it's not guessing. You analyze. You analyze first. So right now, you see it's still going down. I didn't really do an analysis here, but from what I see, it's still gonna go up. I'll explain how I know that when we start doing market analysis. Right now, I'm just showing you what is to buy and what is to sell, right? So right now you can see it's on negative 14, and you can see here's my balance. It's on 5,012 and $58, but my equity is on 4.999. That means if I close my trade now, my account is gonna be on 4,999. You see, but now it's going up. So the equity shows how much your account can be at if you close the trade. All right, and then we look at margin level. It's 2,262. This simply means that you still have an opportunity to recover your trades. If your margin level goes low, below 50%, this will take out your trade automatically, because that means your account cannot handle the loss. But if it's still on 2,000, it means that I can still put in more trades. You know, there's still a lot of opportunity, even though I'm running in a loss, but I can put another trade. That's what it means, right? That's what these margins talk about. But say sometimes you're running in a very big loss, you will see it gets low to 100%. If it goes below 50, then you will see your trade will close automatically, because your account cannot handle that kind of loss anymore. So the broker is saving you your account not to be blown, to be finished completely. That's how it operates. I'm sure you understand. So let's just do revision. So right now I'm in a loss of negative $22. I can close it anytime, and then my account will be on $4,989 if I close it. Now this is a demo account I'm just showing you. So I am going to close it so that we can move on to something else. But you have seen a profit, you have seen a loss, right? Let's look at what is a stop loss and take profit. Remember, I press sell again. When I press sell, here's my sell line. Can you see that? When I press on the same line, I press on it, the left button of the mouse, and then I hold it and I drag down. Can you see that? There's a red line that appears. This red line is written TP. Can you see the TP? TP means take profit. That means if the graph comes down to this level, I would have made profit of $34, right? I would have made profit of $34. That's my take profit. So you just leave it there. Then I press on the same line and I go opposite, right? There's a line there written SL, meaning stop loss. So if the graph comes against me and hits my stop loss, I would have lost how much? $33. And it hit my stop loss. That's why it disappeared. You just hit it now. So I've just lost $33. You can see now my account is on 4,948. So that's the take profit and stop loss. But let's say I press buy. So I just press my buy. Remember, when you buy and the graph goes up, you make profit. That means my take profit will be on top, because if the graph goes up, I make profit. So I put my take profit here on $25. Then when I go opposite, you can see I put my stop loss. This is my stop loss. It's on negative 28. This is my take profit on negative 25. We don't trade like this. Here I'm just showing you. You don't put your stop loss equal to your take profit when you are trading real account. But here I just want to show you the take profit and stop loss. So right now, if the graph goes up to this point and hits my take profit, I would have made this profit. So here you just set it. So right now, I assume that from what I've said, you can place a sell, you can place a buy, you can place a stop loss, you can place a take profit. You know how to choose the time frames: 1 minute chart, 5 minute, 1 hour, daily. Even though strategies that we're going to teach you, most of them will be on 1 minute chart, or even the daily chart and hourly chart. And then you know how to open a currency. We have shown you that, right? So you can check your account. Here you see trade. This is where you trade. There's account history. It shows you all the trades that you've put in. Can you see negative 33, negative 22, negative 17, and your deposit, which was 5,000. And then exposure also shows you how your account is going. Then we have other things that are not very important, but there is account history, there is trade. Now we can see that my graph has passed my buy, but I'm still negative 2. Why? Because my profit is $2, but the commission was negative 4.42. That's why my trade is still in negative 2. Okay, yeah, so that's how you calculate it. Remember, the broker charges their commission, so your graph has to bypass this area and also cover the commission before you get in profit. So basically that's trading. So right now you can see I'm on 0 because my trade is negative 442, which was the broker's money. So my account, I'm on 0, but it's on negative 4 because the broker is taking negative 442. This is exactly where our trade is. Can you see that? So right now you can put a sell, you can put a buy, you can put a stop loss, you can put a take profit. You can just close your trade manually by pressing here if you want, and everything just goes. And here's our account on 4,942. It was on $5,000. We just lost the $60, right? But this is a demo. I wouldn't do that on a real account. I'm just showing you without any analysis so that you can know how to go around the platform. Right, now let me show you the lines, right? So we just saw how to sell, how to buy, how to put a stop loss, how to put a take profit, the time frames, and how to open currencies. Now let's look at the lines. Here is a cross. It's called crosshair. This is the one you measure the graph with. I press on the cross and then I bring it here. So I want to measure how many points did the graph go down from here. From here to here, it went down how many? 50 points. You look at this one in the middle. Can you see it's 3 and 50, and then the price 1.01. So it's 50 points. Let's see how many points did it go from here to here. 63 points. Can you see that? 63 points. That's how you measure the points. Now, do you see this number here? These are called the lots. They are very important. These are the ones that people use to make money quickly or to lose money quickly. Now, how do you measure the lots? Right now we are trading one lot. One lot is quite significant. So I carry my cross and then I measure here, from here to here. It's 65 points. So if I had bought here on one lot and I got all this move going upward, I would have made $65 because I'm trading one lot. But if I was trading 2 lots and it went up 65 points, I would have made how much? 65 times 2, which is about 130. How about $130? If I traded 5 lots, it would be 65 times 5, which would be a lot of money. So let's say I was trading 0.2 lots, it would be 65 times 2. Or let's say I got this downward movement here, I sold here and it went down here 50 points, and I was trading 0.2, I'm gonna get 50 times 0.2. That's how you measure it. So if I'm trading 10 lots, you don't trade 10 lots on a small account. There's something that we call risk management. I'm going to explain that. And I'm going to show you equivalent lot sizes. And most of you who are going to be starting to trade on a $30 account you received as a bonus account, trade on 0.01 until you build your account. Right now I'm going to sell on 0.01. I just sold. They take commission of 0.04 cents, and then I put my take profit here. If the graph comes down here, I would have made 0.16. If it comes down here, I would have made 0.31. That's how you build your account. You see, the reason why many people blow their accounts is because they put a lot size that is way bigger than the account. So these are the lots. This can work against you or it can work for you. It also gives you the ability to multiply your money. You can put in $100 and then maybe trade 1 lot. That is very big actually. It's way big for $100. I'm just making an example. And then the graph goes down 50 points. Guess how much you've made? $50. You've already made 50% of your account. But if it goes against you, you've already lost 50% of your account. So the lot size is very crucial. You must not just trade lot sizes. In fact, on the website of Tickmill, there's a place where you check like how many lots you can go maximum with a certain account. So let's say your account is on $300, they show you that you can go this maximum lots. So right now we know what the lots are, we know how to measure the graph, right? This is the theory. I make it easy because I show you practical part. You know how to sell, you know how to buy. So right now we're going to look at what we call the spreads. What are the spreads? Can you see this Euro USD? There's 46 here and 46 here, and then there's only a difference of 4, it's 8. So it's only a small spread. What are the spreads? The spreads are what the broker are the people who give us the platform to trade. This is how they make their money, through the spreads and the commission. So normally an ECN account, they charge commission and then their spreads become smaller. But there are other accounts like the standard accounts, they don't charge commission but their spreads are bigger. Now, why did we say we must go for an account of Pro ECN? Because most of our trading here at Kingdom Wealth, we also do scalping. Scalping is entering a short trade, just maybe aiming for this downward movement and then taking out your trade. You just make profit and take it out, you make profit and take it out, you make profit and take it out. So you do many small trades, but at the end of the day, they come together and make a lot of money. I am going to teach you scalping strategies, but also I'm going to teach you how to do long trades. I'm going to give you 6 strategies. One of them is how to do long trades. Then the other ones are basically on short time frames, like the minute chart. Right. So now I said I'm going to show you the spreads. So we don't trade every currency. You can see right now the spread on the Euro USD is 46, 46. It's very small. And you can see when I press my buy, I just press buy. Oh my, let me see, I put one lot, I press buy. Okay, I just press my buy, it's coming. Sometimes it delays because of the internet. Let's see what's gonna happen. Right, I just press my buy. It's not triggering. I think it's an internet problem, but it's gonna be fine just now. I want to show you the importance of trading on small spreads. You get into profit quickly. But if you go to other currencies with bigger spreads, you're gonna delay. You start in a very big negative because they take their commission and then you start in a negative. So you should not trade on spreads that are big. Those currencies, the currencies that have small spreads are the measure currencies. It is my internet. Can you hear that? Let me just try to fix it. The currencies that have good spreads are the measure currencies. Normally, can you see these currencies? You will here tick meal. They show you these currencies: USD, CHF, GBP, USD, Euro, USD, USD, JPY, USD, Canadian, and all this up to here NZD, USD. They are major currencies. They have very small spreads, right? And also we have GBP, JPY. They are also major currencies. But then there are also minor currencies which people do not trade a lot. Their spreads are very big. But for now, let me put my buy. Right, here's my buy. Can you see it? Here it triggered. My buy triggered exactly where the price was. Why? Because the spread was small. So it's easy for me to get into profit because my spreads are small. That means these currencies are traded a lot. But now let's look at the USD ZAR, for example. I'm gonna close this one. Let's look at the USD ZAR. It has a very big spread difference, the USD ZAR. Remember, I used the USD ZAR to show you what's this up and down movement in the graph. Now I just opened it. I go to the minute chart. I open here, candlestick. I zoom in and I take this thing forward. Look at the spread. All right, the spread right now on the USD ZAR is not very big, actually. Like sometimes there are times when it's very, very big. I want to look at a currency that has a very big spread difference. Oh, I didn't do USD ZAR. Let's see. It's actually USD ZAR. The spreads are not very big now. Sometimes they're very big. They'll be like 30 or 40 different. Like 40, they would have a difference of 40. Now let's look at this currency. I don't even know what it is. See the spread? Let's look at the spread. Alright, this is 35 and 52. That's quite a huge spread. Can you see that? Now, let me press a buy and see the difference. So right now I just press buy on this currency. I don't know what's PLN. Right, I press the buy. I just pressed buy. Can you see where my buy triggers? Can you see? Here is the price level, but look at where my buy triggers, and I start in a big negative already, -$9, and I'm trading a very small lot. And let's see how many points the price has to travel before I get in profit. 146 points. It has to go up 146 points before I get in profit. That's what happens when you trade currencies with big spreads. Do not trade those small currencies. Focus on the major currencies. And this is the way to get them. They are lined up here. And of course, there are others as you go down, like GBP, JPY, GBP, CHF. But you know, those major currencies, they have small spreads. You can make profit easily, like GBP, JPY, all those. So that's how you go around the platform, right? So right now we know. Let's go to our basic currency, Euro USD. If it's open down here, you just press on it and it will open. If it's like this, you press here, you zoom in, right? Yeah. So now let's look at a buy stop and a sell stop. Let's look at a buy stop and a sell stop. So right now we know how to sell, how to buy, how to open the platform, how to change time frames, right? So right now we know how to measure. We know how to measure this. We know how to put our lot sizes. So right now I'm going to show you what's a buy stop and a sell stop. Remember, when I press sell, okay, like now, and it goes down, I make profit. If I press buy and it goes up, I make profit, right? Now let's look at what is a sell stop. A sell stop is like a sell, but it's not really a sell. It's like a sell order. For example, you press anywhere below the price. This is the price level. You press anywhere below the price, you go to trading, you go to sell stop. Okay, I want to repeat that. That was quick. I go below, anywhere below the price level. I just press the right button of the mouse. It will show something like buy limit, trading, depth of market. I go to trading. I go to sell stop. Can you see that? That's a sell stop. What is a sell stop? Here it is. It's still not triggered. So I put my sell stop here near the price. What does that mean? This means that if the price goes down and touches my sell stop, then my sell will be triggered. It's as though I've sold. That's a sell stop. So if the price touches it, it triggers the sell stop, then my trade is triggered. My sell is triggered, exactly like I've pressed the sell. That's a sell stop, right? Let me see if it will touch it. If it doesn't, I'm just gonna leave it and show you a buy stop. It might touch it if it goes down. If it doesn't go, I'm just gonna leave it. So I want you to see, it just touched my sell stop, and just look, my trade now has been triggered. A sell has been triggered. Why? Because it touched my sell stop. It touched it and it went up, so that's why I'm in a negative. Now let's look at a buy stop. Buy stop operates exactly like the sell stop. I press on top of the price, I go to trading, and I press buy stop. Guess what? There's my buy stop. If the price goes up and touches my buy stop, that means my buy stop has been triggered, right? It goes up to this point and hits my buy stop. That means a buy has been triggered, right? But for now, since it has not touched it, nothing has been triggered. So I'm just going to close it, because when I teach you strategies, we want to use them, right? Then when we press up again, this one we don't normally use, but just for you to know, you press the right button of the mouse, you go to trading, then you have what? Sell limit. Remember, that one was sell stop. Sell stop, you find it underneath. Sell limit means that if the price touches this, right, it's gonna trigger your sell. Normally people use it when they assume that the graph will hit and then come down. So here is a sell limit. It's very different from a buy stop. Buy stop means that if the price goes up and hits your buy stop, you've triggered a buy. But with a sell limit, if it hits this one, it is gonna trigger a sell. And then the assumption or the analysis is that after hitting it, it's gonna go down. We don't normally use this in our strategies. Remember, trading is a very big platform. The same also underneath, you go to trading, and then you do what? You go to buy limit. Buy limit is here. You assume that if the price comes down and hits this, it's gonna trigger your buy, because you assume that something like this is gonna happen. It's gonna come down, hit it, and then come up, right? We don't normally use buy limits or sell limits. Our strategies are quite simple. So right now, you know how to sell, how to buy, you know how to put a stop loss, how to put a take profit, you know how to change your time frame, you know how to measure, right? You know how to measure. And then here are lines. I'm going to show you two lines. This line is called a trend line. It draws a trend, but you will explain it clearly when I talk about trends in the next chapter, right? And this is a line that we use to draw our support and resistance, right? Or so what I'm going to explain them when I talk about the next chapter. Actually, I will be explaining them, so don't confuse yourself now. Right now, just make sure that you know how to go around your platform. You can put your sell, you can put your buy, you can put your buy stop, you can put your sell stop, right? We have also showed you a buy limit and a sell limit, even though we don't use them much, right? We can put a stop loss. We know what spreads are. So now I'm gonna show you what I call a trailing stop, right? So let's say I open here, I put my buy stop. Remember, buy stop is on top of the price. It's not buy limit, it's buy stop. What is the difference? Let's see if my graph is moving. Oh, here. Here's my buy stop. Can you see my buy stop? Here's my buy stop. That means if it goes up and hits the buy stop, I've triggered a buy, right? Now I press on the buy stop, right? And I put a trailing stop. Can you see that? What is trailing stop? And I choose the points. Let's say I put 20 points. That means that if my graph comes up to this level and hits my buy stop and it goes up, let's say 25 points or more, right? My trailing stop, what is a trailing stop? A trailer. A trailing stop is a stop loss that goes behind you. So let's say you put a buy stop and then the price hits your buy stop and it keeps on going up and up and up and up. The trailing stop will be following the graph. The more it goes in profit, the buy stop will be behind it. The more it goes deeper in profit, it will be going with it. But when it turns back, the buy stop will not turn with it. It will just stand still. So when the price turns back, it will just stand. And if it goes back 20 points, because you put your buy stop 20 points away, and hits your trailing stop. Sorry, you put your trailing stop 20 points away, right? Remember, after we press the buy stop, we pressed on it, we put trailing stop, and we put 20 points, right? So that means this thing hits our price and it keeps on going up and up. Let's say it goes up 50 points. So we're already in profit 50 points, right? And then it turns back. Remember, the trailing stop will be following it behind, 20 points behind it. When it turns back, your trailing stop will not go back with it. It will stand still. And if it comes back, it will hit your trailing stop and it will take you out in profit. That's a trailing stop. It will follow you. It will keep on following you in profit. But if the price turns against you, it stops. And if the price hits it, it will take you out in that profit that you've made, right? So that's the trailing stop. Let me just show you, see if I can show you a trailing stop. Let's say I want to see if I can make profit and show you a trailing stop quickly, how it works. But it's a stop loss that follows you. Remember, there's a stop loss that you set, you just stand still, but there's a stop loss that will follow you in profit, called a trailing stop. So let's say right now I press a buy. Right, I just press the buy. Sometimes it's a bit slow because of internet. You must make sure that your internet is very good. We see that the thing has just hit my buy, but it has to pass it and cover the commission. So right now you can see I'm on 0 because I just covered the commission of negative of 4 cents. If it goes higher than this, I'm gonna be going in profit. So now on my buy, I press my right button and I see a trailing stop. So I say trailing stop should follow this 15 points, right? So if this graph goes deep in profit, 15 points or more, the trailing stop will appear. It will appear. There's my trailing stop. It just appeared. So the more it goes in profit, it will go with it. Let's see if it will go more in profit. It just appeared. That means this thing has just gone 15 points in profit. Let's see. Can you see? There's my trailing stop. My trailing stop is this red line. It's following it. Can you see that? It's following it. Because here is my buy, and now this is my trailing stop. It follows it. and if it goes deeper in profit, it's just gonna follow it. But if this turns back, you see the trailing stop stands still. If it comes down, it's gonna hit the trailing stop, and I'm gonna come out with my profit, so I'm secured, right? That's how it happens. And let me show you something else. Can you see it's coming near my trailing stop? But here's my profit, and here's something else. Right now I'm in profit. Can you see that? And let's say I take my stop loss. This is my stop loss. I just put my stop loss here. All right, now let me just finish the trailing stop. So here's the trailing stop. Can you see this is my trailing stop loss? It's following this graph in profit. Then when it goes up, it follows it. If it comes back against me, it stands still. That's the trailing stop loss. It's a moving stop loss that will go with you in profit, but if the graph comes against you, it will just stand still. So far you know how to buy, how to sell, how to put a buy stop, how to put a sell stop. You know the buy limit even though you don't use it. Can you see now it's coming against my trailing stop? My trailing stop is standing still, but my profit is secured. Can you see that? And if it comes down more, it is gonna hit my trailing stop. Or I can take out the profit anytime I'm happy. I can close it manually, or I can wait for it to hit my trailing stop. Right. So I'm just gonna remove my trailing stop right now, or let me just leave it because I wanted to show you something. So it can hit my trailing stop, but now because there's something I want to show you, I'm gonna remove my trailing stop quickly. There's a reason why. So I cancel the trailing stop, right? I just moved it. Now let me just close this trade. I want to show you something else. So I just close my trade in profit. Here's something else I want to show you. So let's say I press buy, and the graph goes up. After pressing buy, I press on this line and I put my stop loss here. Remember the stop loss? Now let's say the graph goes in profit. I hope it will go up in profit so that I can show you that. Let's say it goes up in profit, right? If your graph goes in profit, let's say it goes up and up and up, I can then take my stop loss and put it in profit. But now it will refuse because my graph is not yet in profit. If I try to put it here, it's just gonna refuse. That's the sound of refusing. But if my graph goes in profit, I can then take my stop loss. It's not a trailing stop, it's just a normal stop loss. And then I put my stop loss in profit. Then I'm safe. I want to show you, let's say it goes up higher than this. I'm going to take my stop loss and put it in profit. Right? Here it is. Here's my stop loss. Can you see it? It's on negative 0.21 now. But now I take it and I put it in profit. Can you see now my stop loss in profit? So I'm safe. So even if it goes down, I'm never going to be negative because I've already put my stop loss in profit. It's not a trailing stop, it's just a normal stop loss. And if it goes higher, I can take out my stop loss and put it more in profit. Can you see that? That's my stop loss. So it's going up, I'm just taking my stop loss there. I put it in profit, so I'm safe. So even if it goes back, I'll never be in a negative. It'll take me out in profit. That's putting your stop loss in profit. So I'm sure you can see it's not very difficult. So you just have to watch this DVD. So right now you hit my stop loss, but I came out in profit still. Why? Because my stop loss was in profit. Right. So now I think I'm done with showing you the candles and everything. After this, and now I'm going to explain to you the analyzing of the market, because the big question is, how do you know when to buy or to sell? And right now as a beginner, just focus on that buying and selling. Forget about the buy limits and all those. Just buying and selling, take profit and stop loss. That's it. Right? How do you know when to buy and when to sell? That's when we're going to look at the market analysis. So I'm going to show you 2 ways of analyzing the market to know that this is the time for me to buy or this is the time for me to sell. Right?